let's go ahead and get started. We're actually very, very excited about this relationship and this add-on with Dr. Carr. We've had a lot of people over the years asking us to put in Dr. Carr's methodologies into MetaStock, and it's taken us a while to get there, but the result is one of the most powerful add-ons we've released. So we're very, very excited about it. I won't spend a lot of time on the add-on because Dr. Carr is going to talk to you about that. But Dr. Carr, a lot of people also know him as Dr. Stoxx, is the founder and CEO of Befriend the Trend Trading and author of 2 best-selling trading books, Trend Trading for Living and Micro Trend Trading. Both were published by McGraw-Hill. They've been translated into various languages, as you can see there. He's been actively trading the market since '96, following several years of studying technical analysis. I know he's going to talk about his funds and what he's doing, so I'll let him talk about that. But where a lot of the MetaStock customers know him from is from his Befriend the Trend website and his advisory service that he offers in his newsletters. So we're excited to hear about those and what he's going to talk to you about there. So these are the books that he's going to be talking about in the add-on that accompanies them. So the MetaStock add-on that Dr. Carr has put together, the Dr. Stoxx Trend Trading Toolkit, basically includes all the methodologies that are in the Trend Trading for Living and the Micro Trend Trading books. So this really gives a lot of Dr. Stoxx's power into MetaStock and scanning the markets, the indicators, the experts that Dr. Carr is going to talk about. So with that, I'm actually going to go ahead and turn the time over to Dr. Carr so he can talk about the add-on and what he's done in MetaStock that's very, very exciting. So Dr. Carr, over to you.
Okay. Thank you very much, Kelly. It's very good to be here with you all. I do recognize a few familiar names there in the list of participants, so I want to welcome especially those who are subscribers of mine or former trading clients. But want to welcome everybody here, and I am very excited, as Kelly is too, to introduce this new add-on product to you all. As Kelly mentioned, it's been some months in the developing, and that's only because we really wanted to get it just right. We have a large number of scans, explorations as they're called in MetaStock, as you'll see, and a number of expert advisories and chart templates, and it just took some time to really nail down the particulars of each one of those. But it's finished, we're happy to say. So today our task is just to introduce that a bit to you and talk a little bit about how you can use it to help your own trading. As I do that, I'll just introduce myself a little bit by saying that I am as Kelly mentioned, the founder of Befriend the Trend Trading, which began back in 1992 as a stock advisory newsletter, and we've kind of grown from there. I do some coaching of individual traders as well as small group coaching, and we have a number of manuals and seminars that we sell through our website, but our primary service is the 3 daily stock pick newsletters that we put out each day. A little bit more about that at the end of our time today. I wanted to give you a little overview about how I got into trading. I'm not a finance person by profession. I'm actually a trained professor of philosophy and religious studies, as some of you know, and I've been doing that for 17 years now. Back when I first got my first paycheck as a professor, I took some of that money and some extra summer school money that I made and purchased my first stock back in 1996. And I made every amateur mistake in the book. I bought a stock that was being highly touted on all of the stock portals and the internet, and it was one that was supposed to have some great overnight news, and so I put my entire portfolio of funds into that one stock. Of course, you don't do any of those things, as we know, but I didn't know that back then. The stock went way up initially, and then it went way down soon thereafter. That story is told in my first book, Trend Trading for a Living. So from that experience, and with a real hunger from there to learn how to trade properly, I began to attend seminars. I began reading books. I joined a discussion portal on the internet called Silicon Investor, which is still going. It's not quite as popular as it used to be, but still there. And 1999, I started my own discussion thread, what we probably would call a blog today, where a number of investors and I got together, and we just kind of put our heads together and tried to figure out how to work the market in such a way that we could be profitable over time, given the fact that we were all working professionals and didn't have a lot of time to devote to it. And I did begin to develop some of my own systems as a result of that collaboration, and was sharing those for free, mostly through Silicon Investor for several years. And the thread that I was managing there became quite popular, and that led to several interviews in various magazines and newspapers. And it was then at around 2002 that I decided to leverage that motion a little bit, the momentum a bit, and launched Befriend the Trend Trading. And our first letter was called the Trend Trade Letter. It's actually called the Swing Trade Letter back then, but we changed the name. And that's been going strong ever since. Every market day after the close, I sit down and do several hours of research and post the best one or two picks that I discern from my systems and send those out to our subscribers. In 2007, I launched two new stock pick letters that are daily letters. One focuses on the ETFs, exchange traded funds, and the other focuses on small cap stocks trading under $10 per share, mostly small caps. And that was also the year I came out with Trend Trading for a Living, my first book. In 2010, the sequel came out, Micro Trend, Kelly mentioned, have done pretty well in the sales and have been translated into various languages. And I'm now just about to submit the manuscript for a third book that will look at combining both technical and fundamental analysis in trading systems. So it's kind of a new venture for me, but it's been one that I am using in my managed account, my managed fund, that's been serving us fairly well. In 2012, as I just mentioned, I did launch a managed fund under the umbrella of a company I put together called Kingdom Capital. The fund is called the 818 Fund. It is open only to accredited investors, but we're just about to launch a separate managed account system through interactive brokers that would be open to non-accredited investors. And if you're interested in that, you can give me an email. I'll put you on a mailing list for further particulars on that. Okay, so just briefly in this webinar, we're going to look at three things, and we'll try to keep our pace fairly swift so that if we have some time at the end, I'd like to actually take you to MetaStock and show you the results of a very recent scan and hopefully leave you with a trade for tomorrow's market. And we'll also have a little bit of time for questions at the end. So today we're going to cover three things. Just a brief introduction to the trend trading toolkit that MetaStock and I put together, and a little bit about how you can use that to find viable trading candidates each trading day. And secondly, we'll look at what determines the best breakout setups. A number of my trading systems, as you probably know if you've read my books, focus on trading with the trend, and you do need to be somewhat selective about the trend, because trends are only your friend until the end. And determining which are the ones that are less likely to end is something that we need to learn. So I'll talk a little bit about that. And then thirdly, I'm going to show one of the setups, one of the explorations in MetaStock in this new add-on is an extreme reversal setup. It happens to be my most profitable system. So I'm going to give you a kind of a sneak peek at that, and that should take up most of our time today. So let me introduce you first to the explorations that we put together with MetaStock. You'll see a list of them here. There are 5 long explorations, and then there are 6 short explorations. There is also, if I can get my little pointer out here, there is a pre-filter high beta watch list exploration. And if you know, I forget which chapter it is in the first book, but I talk about how you build a watch list for eyeballing stocks on a daily basis to determine the best setups. And I'm always getting emails from readers of the book who say, you know, how do I do that? How do I set up the watch list? I thought I was as clear as I could be in the book, but still get questions on how to do that. Well, you don't need to know how to do that now. You just click a mouse and you will have instantly at your fingertips a list of the best trading stocks from all the stocks that are available. Each and every day you can refresh that each and every day if you like. I personally, for my list, I update mine once every week. So over the weekend I usually run the scan and then delete the old ones and put in the new ones. And you should get a list of about 50 or 60 stocks each time you run that scan on the optionable watch list, on the optionable set of stocks. You can run the scan on any subset of stocks you like. You can run it on ETFs or the NASDAQ or technology stocks, etc. I like to run mine on the optionable stocks. That gets me into the most liquid and well-traded stocks. But the scan itself will keep you out of any illiquid or low-priced stock, and it's also filtering in the stocks that have the most volatility. So we want volatility, and we want liquidity, and we want a decent price. We don't want to trade penny stocks with that scan. And I also want to point out that there is a scan that runs both long and short, and this is the scan that I mentioned before. It's my most profitable scan. I do not teach this in either of my two books. It will be mentioned in my third book, but I've taught it in seminars in the past, but it's one that I've been working on for years, as you'll see. You'll hear a little bit later about that. But with the one scan, you'll come up with a list of both long and short candidates. And with this particular scan, I personally like to pair trade those results. So I'll do a little bit more selecting, maybe work in some fundamentals or give a little closer look at the charts, and maybe go up to the weekly chart to weed out the best 2 or 3 long candidates and the best 2 or 3 short candidates, and then I put an equal amount of capital into each so that I end up with 2 or 3 pairs, long-short pairs. I find that to be the most profitable with the least amount of drawdown over time. And it's a great scan. It's one that's very easy to trade. It's 100% mechanical, although, as I said, I do like to do a little bit more selecting from the actual list itself. And it is a scan that has a fair amount of turnover. So you can hold these as long as you wish to, but I find that it usually takes about 5 to 7 trading days for these particular setups to mature. And so that way you're getting a fresh set in, you're getting a lot of good income generated as a result. So anyway, that's just a brief introduction to the explorations. You will see from the names of the long and short scans here that they all come from my first book, Trend Trading for a Living. I won't show you the advisors, the expert advisors, but nearly all of the explorations here also come with a expert advisory that you can apply to the chart with real-time setups as they appear. They will also give you setups in the past so you can compare how those worked. And the expert advisory will also give you exact entry price, exact target price, and an exact stop price. We'll look at that a little bit later. But along with your expert advisories, you'll also have 2 scans that come from my second book, the Microtrend Trading book. These are intraday scans. They run, generally speaking, on a 5-minute chart. They are 100% mechanical, and so they will give you setups on the 2 scans. The one is the afternoon reversal scan, which is the most profitable system in the Microtrend Trading book, and the other is the bread and butter, the long and short bread and butter setups. So you'll get both of those, which both of those give you both long and short candidates. So you really have 4 scans in one among the expert advisories. All right, so with that as a brief intro, let's move on and look at some specifics. So normally, of course, I would run a scan at the end of the day. I like to run my scans after the market close, so I have plenty of time and not in any rush to put on a position right away before the market closes. I don't like to work under that kind of pressure. So I ran the blue sky breakout a few days ago. You can see the date there at the top that it was run on the 1st of April. And because the market at that point was still very much in an uptrend, we had a number of stock setups that showed up on that list. I think there were about 50 hits that came through that day. So you of course can't trade all of those. You'd want to whittle them down, and I do that in a variety of ways. I look at some fundamentals. I check the charts. I run them through various numbers of different valuation and growth metrics to give me the best 3, 4, or 5 long candidates, and these are all long candidates. There is a blue sea breakdown scan, which is the reversal of this. So again, you can put on some pair trades with this particular exploration. Once you have your list, of course, you would click on the Save List, and that will put all of your stocks into a watch list that you would then name, and then you can open these charts one by one and apply the blue sky breakout chart template to it, which you'll get with the add-on, and I think I've got that coming up here. Okay, so what I've done here is I've taken one of the stocks from that list and opened it up in MetaStock, and this is just the simple default chart without any of the templates applied to it. We've got a simple bar chart here, and that's an OBV that I added onto the chart there at the bottom. For the blue sky breakout, that's your primary technical indicator. And this, of course, is the Metro PCS company. It's a communications company. It's a spin-off of Sprint, and they've had some trouble getting going. Despite the big rally in the market, you can see that they had a big spike back in September, October, but it's been kind of downhill and slow going since then. But what I really like about this breakout chart is that you have this nice rounded bottom. I'll show you that a little more carefully in a minute. And you have several recent breakouts to new highs followed by higher lows, and the accompanying on-balance volume indicator that we see down here is also looking at new highs and higher lows. So all of that looks very nice just from a chart perspective. Possible candidates into this simple default bar chart, because sometimes you can see patterns in a bar chart, a simple bar chart without all the moving averages and the candlesticks that you might miss if you put all the extra bits and pieces on there. So I usually start with a simple bar chart, and then your next step would be to apply the blue sky breakout chart template, and that would simply have you right-clicking over the chart. You would go to the apply a chart template selection, select that, and then you can see here there are 1, 2, 3, 4, 5, 6 chart templates that you will get with this add-on package. Nearly all of the setups have their own particular chart setup, so you don't have to fiddle with putting the right indicators on there and so on. It will all be done for you. So this is a blue sky setup, so we would apply the blue sky chart template, and when we do that, the chart would look something like this. I've added a little bit of color and I did some of the drawing there, but you would have the candlestick chart with the 2 moving averages. That's a 50 and a 20 simple moving average, and down below you would have your OBV indicator with a 21-day simple moving average applied to it. And what we're looking for is, you might know from my trend trading book, in a blue sky breakout, is a new price high over the past 40 days or 2 months of trading, which we certainly have here in PCS. And you're also wanting to see a new high in the OBV indicator. OBV, on balance volume, is a cumulative indicator of volume. So the volume on the up days is added to the ongoing indicator, and volume on down days is subtracted. I'm just seeing now that the audio is not so good. I do have a microphone here that I can try, which I'm just plugging in. Is that any better for people now that I'm using the microphone? In any case, if you are hearing me just fine, it looks like audio is fine. Okay. All right, so no problem. I won't worry about that then. So back to the chart here. This is really just a very nice looking chart. I really like the way this looks. This was taken a few days ago. It has ticked up a little bit from the 1st of April. And so this looks like a pretty healthy breakout to me. But there are other things we can do just to make sure that this is a viable breakout. As any of you know who trade breakouts, new price highs, new price lows, what can get really frustrating is the head fake, the rush to a new high. Lots of people jump on board, and then suddenly it loses the momentum and pulls back down into the trading range that it was in before. We want to try to avoid that as much as we can, and I'm going to show you a couple of things you can do to weed out the stronger candidates among a long list like the one that we saw. So one of the things that I like to do is I go to a site. It's a free site called finviz.com. Some of you probably know it. It has both technical and fundamental analysis in its database. It's all free. So I type in PCS, I punch that in, and I come up with a whole slew of fundamental data, as well as a technical chart and some technical data. And my focus in this particular setup is on these two columns. The column here on the left is your valuation column, and the column on the right is the growth metric column. And I'm not, concerned that much about numbers. And I don't know the industry that whether excellent or not. You have to not only compare these with the average stock, but you also have to compare them with averages within their peer industry. But what I am looking for in this case, just to make things as simple as possible, is a lot of green and not a lot of red. So, and you can see in the left column especially, this is a very nice value pick. It's undervalued, a lot of green there in the value side. It does have some debt. It turns out that that's kind of endemic to the sector itself, so it's nothing unusual. On the right side, you do see a little bit of green, a lot of black, which is okay. That's neutral, and just it did have a problem last quarter, but it looks like from the chart that has already been priced into the stock, because the stock is moving higher in the hopes that the next quarter will be much better. So all that gives me a green light on this position in PCS. The last thing that I would do is take a look at a momentum indicator. One that I like a lot is, and it's a very well used one, is the MACD. MACD indicator is a momentum indicator that will rise as the stock price is rising. It will fall as the stock price is falling, and so that in itself doesn't give me much information. But what I want to see is that the MACD is posting new highs every time the price is posting higher lows when the price is posting higher lows. So in other words, it's matching the price. If it is bearish relative to the price, then what I may be looking at here is a stock that's running out of momentum, and it may well be a head fake. I don't want to be pulled into a head fake. So you can see here from the MACD that at this point right here, where the where the MACD is matched up is triggering a new high. So that to me gives me confirmation and some assurance that this is indeed a genuine breakout. So let's compare this chart, which I like, has a bit more, it's a bit more problematic. I'm not going to say that this one won't go any higher, but there's some issues going on here in this stock that need to be looked at. This is STX. It's a software company, and normally it's one that I do like to trade. We've traded this one a number of times over the past few months. It has some pretty healthy fundamentals. It's not 100% there, but it's getting there. In any case, there are a number of things going on in this chart. Now again, here's the simple bar chart. There are some volume bars down at the bottom, which are usually there by default. And there are three things I wanted to point out in this chart that are of interest to technical traders, just from a simple price perspective. And I'm wondering if, I'm not going to ask you, but just if in the back of your mind, if you ask yourself, what are those three things? What are the 3 points of interest in this chart? The 3 things that kind of stand out to you if you're looking at price patterns. Let me show you what stood out for me. For one, I do see a very nice uptrend channel here with 2 pivot points at the bottom and 3 at the top. So that's, of course, a bullish sign. You want to see a stock moving within a trend channel. But one concern that I have is that you have 2 points at the bottom, 3 at the top. So we would expect that the next touch point of a trend line would be at the support line, not at the resistance line. So while we do have a blue sky breakout, that is a new price high over the last 40 trading days or 2 months, my expectation is that this is likely a head fake and that we'll begin to move back down. Also of concern is the gap here that took place back in January of this year. That was after earnings. You can see the gap marked right there. That's not a healthy gap. It's a gap after a strong uptrend. You never like to see that. That sort of a gap down after a strong uptrend tends to lead to more bearish action than bullish action. And of course it did. It did lead to a sell-off. And so that none of that was unexpected. But we still haven't gotten back down to the support line. So I'd be a little concerned that this might indeed roll over and push back down there. The third thing, though, is a bullish head and shoulders pattern, which you can see there after the gap, and that's something that would be worth noting. On the bullish side of this, the only problem is that if you've ever read, I think it's Thomas Bulkowski's book, The Encyclopedia of Stock Charts, which I highly recommend. I've learned so much from that book, and I keep referring back to it again and again and again. You'll learn that the inverted head and shoulders, which normally marks a bottom, it's normally a bullish pattern, is one of the least reliable patterns out there. It's not uncommon to see one, but it's just not that common. Not that effective as a marker of a bottom. Much more effective are things like double, triple bottoms, rectangle breakouts, triangle breakouts, wedge breakouts, those sorts of things. But the head and shoulders is not a real effective marker of a bottom. But within any case, let's continue to do our analysis of this. As we go into the chart, we apply the chart template. It looks just like this. So this is exactly what you see without my coloration. I've also added on the expert advisory to this for the blue sky breakout, and you can see that while this stock was pushing up off support in that most recent uptrend, I want to point out that one of the things that I like to do with this blue sky breakout is use these new, once you're in a position, of course, assuming you've caught it early on in its sequence of breakouts, use the new signals as points of to your position. So with a blue sky breakout, because the possibility of a head fake is always there, I usually like to scale into a position, and so I'll make my first entry quite small, and if it moves up in my favor, then I will add on to that. If it moves down, I will add only if it seems to find support at the breakout pivot, but if it moves below that, I won't do any adding, and so on until it hits the stop. If you're trading options, you can continue to roll up your options, your contracts over that period of time with each new signal. And so anyway, that's just one of the things you can do with this expert advisory. But moving on further with our analysis, we go to look at some of the fundamentals of this stock, and we see that in the terms of valuation, it's not too bad. There's a little bit of green there. There's also the debt problem, but PCS had that as well. Over on the right-hand side, the growth metrics, EPS this year looks excellent. Next year looks a little weak. Going forward 5 years, not so good. We're not worried about that, but there does seem to be a preponderance of black and some red and just not a whole lot of green. So the fundamentals are okay here. If I'm happy with the chart, I'd be happy with this, but there's enough problem in the chart to give me some pause. The other thing then that we would do, of course, is look at a momentum indicator like MACD. MACD is one I use a lot, but you can also use the commodities channel index, the CCI, or RSI set at a 5 period, or the rate of change is another one some traders like to use. Those are all fine to use. I just happen to use the MACD quite a bit. And you can see here that while price is making a new high off to the right edge of the chart, if we go back 2 months, 40 days, we see that MACD over in this area is not at a new high. It's actually higher than MACD is on the right side of the chart. So there's some problem in this recovery rally off the gap. The gap has been more or less filled, which is a good thing. Gaps usually fill at some point. But sometimes when gaps fill, that's then a sign for those that lost money in the gap to bail out, to take their profits if they held on that long. So you might well see some rollover here. In fact, I looked at the chart of this today. It was trading down a bit, down to around 36, maybe just under 36 as of today's close. And also wanted to show you that if you right-click on any of the charts with the expert advisory on it, you can click on the commentary, which will tell you about the setup. It will also tell you kind of how to trade the setup, give you some advice on that, and then it will tell you exactly where you want to put where you want to enter the stock, the best, most viable entry price. It will give you 2 options for a stop loss and 2 options for a target exit. You can see that here on this particular signal, the one on the far right, that signal right there, you can see that the suggested entry price is at 36.97. The stop loss is either 34.23 or 34.94. There are 2 methods being used there, and you can take the lower the one, the higher the one, or I would prefer averaging them together. Target exit, there are 2 options here, 42.51 or 40.01, and again, you can take either one of those or average them together. So in other words, your expert advisory is going to give you all the details that you need to manage your positions. And that, as many of you know, is one of the hardest things to do in trading. It's not that hard to find good stocks to trade. It's what do you do once you're in them that is, that's where the real money is made and the money is lost. So this takes a lot of the guesswork out of it for you. So let's look at a different system now. This is one of the explorations that you have in the add-on package. It's a long-short exploration, so the one click of the mouse will give you both long and short candidates. This is a system I call the mean reversion system. I developed it initially back in 2002 when I took a Bollinger Band seminar from John Bollinger himself, and learned everything I needed to know, I guess, about Bollinger Bands. I've been a big fan of the bands ever since. I use them for all sorts of reasons, but I'm especially fond of looking at systems that trade the reversal pivots. Once price moves outside the bands, they tend very quickly to move back within the bands in the reversal of the momentum that caused them to move out of the bands. And it's that snapback, that reversal, that reversion to mean that I like to play quite often. But you can't just take any old price that falls outside of the bands. That's not going to work. You'll end up losing money that way. So you do have to have a system that's been tested over time that will weed out the healthy signals from the less healthy signals of prices moving outside of the Bollinger Bands. So I first developed a system back then, and it was actually fairly profitable at the end of 2002, early 2003, because there's quite a bit of market volatility back then as the market was moving out of a bear market into a bull market, and then it started to lose some money. So I went back into testing mode, and in 2008 I developed a system that was really quite profitable, and published a manual and taught a seminar on that system back then, 2008. Three more years of testing, however, and I was incorporating a function of the Bollinger Bands called percentage B that John Bollinger writes about in one of his books, and factored that in and found that, whoa, that really made the system a lot more profitable, and so that has led to the system that you have today. And one of the nice things about the system in its development stages is that over time it has gotten simpler and simpler, which is, I think, a testimony to a good system. If you have too many indicators, too many factors that it has to fulfill, too much complication, you may end up with a system that's just more work than it's worth. And this particular mean reversion system that I've been using now for a number of years is very simple, very simple. So anyway, here's a recent candidate leveraged ETF that trades the natural gas, the price of natural gas. It's actually a bearish ETF, an inverse ETF, and it's, I think, 3 times the leverage of the standard price of natural gas. In any case, it's quite volatile. It's not always an easy one to trade, but it does seem to work pretty well. In fact, all the ETFs work very well with this Bollinger Band system because as an index, they tend to revert to mean more often than a particular stock. A single stock can get caught in a downwind or downtrend or an uptrend that just keeps going and going and going until it gets way past, extreme, and things get way overdone. And determining when that point is not always easy. But ETFs or the indexes tend to be a little bit more attracted to the mean, which in this case is the 20-period moving average. One of the things I look for, two things I look for in determining the best candidates. Now, sometimes when you run the scan, you'll only get 1 or 2 longs and 1 or 2 shorts, and that's fine. That makes it easy. But sometimes you'll get 6, 7, 10. This. Okay, I guess we're back on. It looks like we lost connectivity, but we're good to go. So I just want to point out that the signal came after that the lowest of the red bars there. You have a little doji bar. That's when the signal came for the long of the mean reversion here, and you could ideally enter at the close of that day. So you can run your scan if you have the real-time access to MetaStock data. You can run your scan in the afternoon, and if you don't have too mwant setups to look at, you can just put on a market at close order with your broker, and then you're good to go. And then you want to look for former price support. This signal here on the right clearly has price support because the signal on the left also bounced right in that same area, about 11, 11.5. And the other thing you want to look for is that there was an earlier mean reversion signal that was profitable. So if it was profitable in the past, then this is likely a stock or an ETF that likes to revert to the mean. And then that also is a positive in this particular setup. Here we have both. We have price support, and we have a stock that in the past, in the fairly recent past, produced a long setup that was nicely profitable. These are very quick setups. They normally complete their move in 5 to 10 trading days. You can do a number of things to manage these trades. If you're an active trader, you can just eyeball the chart each day and keep track of how it's going. Normally these like to run back up into the 20-period moving average, so your target would be that, the 20-period moving average. You can see in both cases that the moving average was hit after about 5 to 7 trading days. You can also just put on an order to sell it at the end of 5 days or at the end of 7 days. I sometimes do that if I'm not able to attend to the markets every day. And then you have an automatic exit at the close of that day in the future. Now you probably will want to trail a stop, and I usually put on a 10%, 8 to 10% trailing stop loss on these positions, and that works nicely to protect some of the profit or lower your risk as the stock moves up in your favor. There are occasions where you'll get a signal like this, and it will kind of flounder down there around support, around the signal line, so you get some sideways consolidation action, and that's one of the good things about a time stop, is that you'll get out of that. You won't have to sit around for several days or weeks before the price moves, and then you can take that cash and put it into something else that is moving. You don't want to sit in a stock that's just going sideways unless you've this is my most profitable system. It's extremely profitable for a couple of reasons. One, you can pair trade this, so you put on both longs and shorts at the same time as set pairs. And secondly, you're getting out of the positions after 5 to 7 to 10 trading days. That sort of turnover is a really good way to generate solid income for your portfolio. So so that's one of the explorations that you have in the system. And then just briefly, I know we're kind of running out of time here, so I want to go quickly over the remainder of this. There is a short system I wanted to point out. We've been talking about longs all day. Let's talk about some shorts. The relief rally exploration is taught in the trend trading book. It is one of the most solid, profitable systems that I have. That, along with its inverse, which is the long pullback system, are the two systems that I probably use the most for short-term, two week or so trades. So you run that scan, and one of the stocks that came up a few days ago is a relief rally setup in the stock FSLR, First Solar Company, one of the healthier of the solar companies. It does have some fundamentals going for it, not a lot, but some. And it was right here on that doji, right into the 50-day downsloping moving average, with the 20-day downsloping moving average below it, and the overextended stochastics that gave us the relief rally signal. So you would go short there at the close of that day. You could go short at the open of the next day. The expert advisor is going to ask that it's going to give you an entry price of about 2 cents below the low of the signal day. So you would enter 2 cents below that to about 28.87 or so. And it will tell you exactly where to put your stop loss and exactly where to put your profit target, and then you're good to go. You put on those, and then it's just, you know, carefree trading from that point on. So that's a relief rally chart. And going back a little bit on the same stock, First Solar, with the expert advisory attached, you will see a number of relief rally setups that took place in late 2011 and early 2012. Most of these are profitable. The early ones here look like they probably would have gotten stopped out, but the others look quite here about going short at 100 and maybe covering down here under 50. So that's a nice short, as everybody knows. And here's the same stock as it is after all those signals. You have here a number of nice pullback setups. So this is the very same system, but in its inverse, long on the long side of things. And you can see here 5 nice signals. And this is also another thing you can do with this particular system, either the pullback long side or the relief rally short side. You can use these extra signals, these additional signals during the uptrend or during the downtrend to add to your position. But what this system gives you is really the ideal time to add to a profitable position. And you're adding at the dips. You're buying the dips is what you're doing with this system. And it's an excellent system. It's time tested. I use it again and again and again, and I've been doing this since 2002. And I just love the system. It's simple. It's clean. You know exactly when to get out, exactly when to get in and get out, and you'll get between the two explorations probably 10 to 12 stocks to look at each day from the list of optionable stocks. So that's our brief presentation. I just before I have one moment real quickly to look at MetaStock itself, let me just let you know that I'm going to offer anybody that is here today a free 2-week pass to our 3 stock pick letters: the trend trade letter, which is now in its 11th year, the ETF reversal letter, which is very much our most profitable service, and then the cheap stock letter, which trades stocks between $2 and $10. And you'll also get a free manual, the stock options manual that I published a few years ago, which gives you some general information about options, but also a very good straddle play with options that you can use during earnings. We're coming up on earnings season, so that's very timely. And you'll also get with that a manual called the BTT Max manual, which is a moving average reversal system that I developed a number of years ago that you apply to the hourly chart. And it's a very good system, but you have to be a little careful with how it's applied, and I explain how to do that in that manual. So you're going to get 2 manuals, 2 weeks of free access for nothing. All you have to do is click on the link down here, or if that doesn't work for you, just email me and I'll send you a link, and then you're good to go. Let me just real quickly, just 1 minute here, I want to take a look at MetaStock. And Kelly, if you could set us up here. Okay, so I'm going to share my screen, and there is MetaStock. And I wanted to leave you with a possible trade for tomorrow, and I'm not making any promises that this is going to work out. I ran the pullback scan exploration earlier today and came up with a number of hits. You can see here, I guess about 25 stocks past that screen. A number of these that you will be familiar with, you know, U.S. Airways, a couple of airlines on here, several airlines, KB Home, Hewlett Packard, of course. Groupon was one chart I was kind of focusing on. So if we open that chart, we are we're going to get the default bar chart. And what I like about this, again, is that it's been in this long sideways pattern, but it's starting to pick things up. If we apply the template for this particular setup, which is the pullback template, and then we'll zoom in here on where the chart is right now, you can see the buy signal generated by the expert advisory, and it put in a new price high not too long ago, got up to about 630, and then it's pulled back to its upsloping 50-day moving average. All of that's bullish. There's a nice bullish engulfing candle The volume down here is a little low, so that's a little bit concerning on this reversal. You might want to wait just a half a day to see if the bulls step up to the plate. But that does look like, just on the surface of things, without doing any further fundamentals or anything else, it looks like a pretty decent setup. I also know Groupon's fundamentals aren't real good. Kind of an odd business model, but nevertheless. So one of the things you'd want to look at too is if you look at Expert Advisory, you click on the commentary, and then it will tell you exactly where to enter. So you'd want to enter it just a tick above 570. You'd set a stop loss at 528. The ATR stop loss is 5.04. That seems a little far away, so I'm inclined to go with a percentage stop loss. Your target exit is either 656 or 669, and you'd have to work out your own sort of risk-reward ratio. Just on the surface of things, that risk-reward is not as good as it can get in other setups. I just wanted to show you that's the kind of thing you're looking at, and the sort of thing you can do with this add-on package. All right, so I'm going to get back to the main screen here, and let's open it up for questions. We have, I think, a couple of minutes left for questions. I see one question there from STC. Do you only use the Bollinger Band cross with price or another filter? The Bollinger Band mean reversion setup, STC, is a pure price, setup. So there aren't any indicators that are used in conjunction with that. You certainly can, if you wish to, put on something like a CCI or an RSI to determine whether there might be some bullish divergence. So the most recent low that punched through the Bollinger Bands, you can compare that to a previous low and see if there might not be some bullish divergence. I love to see divergence. It's just that it's not required for this particular system. So if you have 10 stocks and 3 of them are showing bullish divergence and 7 aren't, you go with the 3 that show the bullish divergence. So that's certainly an added filter you can add. Windsurf asks, where do we click to get the newsletters and pamphlets? Windsurf, you could go to www.befriendthetrend, all one word, befriendthetrend.com, and you'll be able to set us, you can sign up there for a free weekly stock pick, and then if you want to give us a try, let me know and I'll set you up with a free 2-week trial. Neil, I did my my PhD, a master's and a PhD at Oxford University, but I am American. I'm born in Washington, D.C., raised out in California, and I just went over to England to do the doctoral work. I just always wanted to go to Oxford and ended up doing that. STC gets a very good question, scanning for divergence. Among the explorations, there are a couple of systems that actually rely on divergence. There is the bullish divergence exploration and the bearish divergence exploration. And just briefly, the bullish divergence looks for stocks that are in a long-term uptrend but are currently selling off. They've put in a low, but relative to a recent low in the past, the indicators, and you can use a variety of them, are showing bullish divergence. In other words, the price is putting in lower low, the indicator is not. And you will get 2 explorations, one a long and one a short, that finds exactly those setups. Now, the problem is that scanning for the divergence in the indicators is kind of difficult. So what you then need to do is, once you have your short list of stocks that pass the scan, you have to put them into a watch list, and then you just eyeball them. There won't be too many of them each day, maybe 3 or 4 or 5. You would just take a look at them and determine yourself whether there is indeed some genuine divergence there. Sometimes the scan will allow a stock to pass through that was indeed showing divergence on a previous low, but not the present low. So in other words, you'll get a good filter, but you have to do a little bit more work to weed out the genuine divergence setups. I'll let Kelly. Kelly answered Roger's question there. Hey, Dennis, that's a good question. If you are a longer term or more of a position trader, then certainly by all means you can apply all of the explorations and the add-ons to the weekly chart. If you work primarily with the weekly chart, I almost always reference the weekly chart just to make sure that I'm not buying a pullback in a stock that looks really ugly on the weekly chart. Then you certainly can. You just have to indicate that in the exploration before you do the final click of the mouse, and that's easily done. You can also, of course, run all of these on intraday charts, assuming you have the real-time data feed from MetaStock. Now, that's, it's a little bit more expensive, but you're going to have a wider range of access to this add-on package with the real-time data. Let's see, anyone else here? I should make a note. I mentioned quite a bit in my first book and a little bit in my second book that I was a big user of stockcharts.com, and it's a fine service, nothing wrong with it at all. But as I've been working with MetaStock to set up this add-on package, I have been going back and forth between Stock Charts and MetaStock in order to kind of tweak the fine-tuning of the MetaStock add-on. And what I've learned, is that the MetaStock, I don't really know how it does it, but it's like comparing a Volkswagen with a Mercedes-Benz. The Volkswagen might look nice, but it just doesn't function nearly as smoothly and swiftly and as efficiently as the MetaStock version. So to put that in simpler terms, the Stock Charts is going to give you stocks showing up that actually do not fit the filter, whereas MetaStock is going to give you the cream of the crop, the best stocks. And I don't know. It's just a lot more sophisticated. The way it accesses data and retrieves data and passes stocks through the filters is just a lot more robust. Stock Charts is a little bit less expensive. Now, frankly, MetaStock's pricing points are really good for the data feed. I mean, I'm surprised their prices from what they used to be they've really come down, and they're very competitive with Stock Charts, with certainly against something like eSignal, which is, in my opinion, way overpriced, but it's really reasonable. All right, Neil asks, Mike asks how to use the Bollinger Band with percentage B in your ETF mean reversion setup. Mike, without giving away the full system, which I won't do, but what the mean reversion setup looks for is stocks that are falling regularly day after day. In other words, they haven't gapped down so that they're trading outside of a Bollinger Band. They've traded down outside of the Bollinger Band, and that's where the percentage B comes in handy, because that will you can set the filter so that it has increasing or rather decreasing increments of percentage B, which gets you closer and closer to the Bollinger Band. And then when it crosses over, that triggers the first part of the signal. And then the second part of the signal is we need to see some sort of a bullish candle. So we need to see the bulls to put the brakes on the falling knife. And then the absolute opposite is true for the shorts. You've got a stock that's going up, 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 up incrementally each day. It hits the Bollinger Band, then it trades outside the Bollinger Band, up above them, and then you see the bears jump, right? They jump on top of it and say, we're not, enough is enough. We're going to push this price back down. So that's in a nutshell how the Bollinger Band system works. Neil Kane, statistical methods. No, I haven't. In a simple nutshell, I have on my website every trade that I have put on since 2002. You're going to find almost, well, I think it is in fact now, over 3,000 trades in the trend trade letter alone, and there are probably another 3,000 trades in the ETF letter, and then there are 60 or 70 trades in the cheap stocks letter. You can see every single trade, exactly where we entered, exactly where we got out, and I'll just put that out there as our statistical verification for the validity of these signals, because we've done very well, and we've done well even when the market was not doing well, and that's something that I attribute to our resolve to trade both sides of the market, long and short. You always want to have a few shorts handy when the markets begin to top out, as I think they're kind of doing now, and you always want to have a few longs handy when the markets begin to bottom out. But when the markets are in between top and bottom, you want to trade a mix. You want to trade a mix of both. I mean, that's just the smart thing to do. All right, Anka asks, do you have any recommendations for mobile charting applications? Anka, I don't. I trade with Interactive Brokers. They do have a mobile app, an intraday chart if I need to. It's a fairly simple chart, and I don't trade from my phone. I really don't like to do that. I need to have multiple screens in front of me with large charts, and maybe that's because my eyesight isn't real good. I don't know, but I don't like to trade on things that are so small. It just feels claustrophobic. But having said that, people do trade from their phones, from their iPads. So, but I'm not familiar with those apps. I'm sorry. I'm sure they're out there somewhere. Chris, what is the cost of the BFTT system after the free trial ends? Good question, Chris. You have two choices then. You can either pay monthly, which is $99 a month for all three newsletters, or you can pay $199 a quarter, which brings it down to about $67 a month. So those are your two options after the 2-week trial. You can cancel any time. You won't be charged a cent. But once your 2-week trial is over, then unless you cancel, the monthly or the quarterly will kick in. The monthly normally kicks in by default, but if you want to switch over to the quarterly, you just send me an email and I'll have my team set you up with that. Once again, my site is befriendthetrend.com. You can email me directly at drstoxx@befriendthetrend.com. That's drstoxx@befriendthetrend.com. Thank you, Kelly. Thank you, everybody, for coming. And I will let you go. God bless you all. And we'll see you soon. We'll see you on the trading floor. Bye now.
Thank you, Dr. Carr. It's much appreciated. Thank you for taking the time today to go through the webinar with us and show us the power of your strategy. As Dr. Carr mentioned, we spent a lot of time on this add-on, making sure that the systems were right, that the strategies showed the way that Dr. Carr wanted them to. And I just wanted to recap really quick what's included as part of the Dr. Stoxx Trend Trading Toolkit. So here are the exploration, the long setups. Dr. Carr talked about the blue sky breakout being in his next book. It's not even out in the public yet, so here's an opportunity to kind of get a sneak peek at it. The bullish divergences that he was talking about throughout the presentation. Here are the short setups. So basically, these are ways for you to scan the market for these opportunities. Take MetaStock and the Dr. Stoxx Trend Trading Toolkit and use it to look for these setups. Once you have these setups, you can then take them and actually go through and apply the expert advisors to the chart, which will then give you the buy and sell signals, guide you through the trade. So if you're doing a blue sky scan, you get a setup. It will show you the buy opportunity or the sell opportunity and then guide you through the trade. So it makes it as easy as that. Okay, so just going through the slides, you can really see how much effort Dr. Carr has put into this toolkit for the people who follow his methodologies. And then here are the bonus for real time, the afternoon reversal and the bread and butter expert advisor. the included templates, which basically pull all the indicators, experts, everything in one step for you, which makes it very easy, which are the templates Dr. Carr was showing you earlier. Then finally, what we're going to talk about is just the pricing. That was one of the questions. It carries a 30-day money-back guarantee on it. So if it's something that you try and you don't like it, you can send it back for a refund. But honestly, this is something that's, as we've said, is been in the works for a long time. It's very refined. Dr. Carr said it himself. It's kind of the cream of the crop. We've spent the time to do it and to do it right. So I recommend you give us a call. Try it out free on the 30-day money-back guarantee. Now, if you don't have MetaStock, give us a call as well. We're happy to give you a free trial of MetaStock and then let you have the 30-day money-back guarantee on the Trend Trading Toolkit as part of it. So give us a call at that number listed at 1-800-882-3040. Thank you, everybody, and have a great day.